This is the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Any postings and or social media content are the views of the advisor and do not necessarily reflect BMO's position or viewpoint. The information herein is for Canadian residents only and does not constitute any financial, legal, tax, investment, or other advice. The Wealth Roundup for the week of October 15th, 2025. Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Well, Patrick, everything was moving along quite well until Friday at about 5 o'clock.
Yeah. So our last podcast, we were talking about whether or not it might be timely to take some profits and do some rebalancing. That wasn't because either one of us had a crystal ball. But I think what that this week kind of highlighted, there are swings in the market and even just the whipsaw back and forth. We had this rare earth thing between the United States and China came up again. Just some comments by the president and some reactions by China. We saw the markets move both ways, slightly lower to start off the day, although I see the markets kind of recovering today. The U.S. market is down about 1% net after our last call, but some riskier assets like Bitcoin still down about 7% since our last call. And then gold, which looked like it was maybe starting to get kind of toppy, up another 4% since our last call. So, the Canadian market has kind of held up relatively well over that period of time. This will be an interesting week because this is the start of another earnings week and expectations are quite high. And the market is still having to fly a little blind because we don't have a lot of that key economic data out of the U.S. because of the government shutdown. So job reports, anything that's coming out of a federal office. And so the markets are really having to depend on private data.
I suppose for the past 5 to 7 business days, this kind of exemplifies the reasoning behind diversification. You don't want to have all your eggs in one basket. What is diversification and why is it important?
When I first got into the banking world in 1998, it was quite common, this idea of not keeping all your eggs in one basket. To be honest, I don't even know if I'd even heard that phrase, when I first started with Bank of Montreal. But often what would happen is people would keep their deposits at multiple banks. I don't want to keep too much at this one bank. And there still would have been some carryovers from, people, thinking of just with people with wealth, the older population that would have would have had experiences like the Great Depression and then Black Friday, in Wall Street in the 80s. And so this idea that, a financial institution might disappear. Well, I think when we talk about this from the idea of portfolio construction, we're looking at assets that act differently under different circumstances and assets that have different return profiles. And so it sometimes seems obvious when we're talking about something like a term deposit, which just earns simple interest versus a stock. But as the investment world has become more complex, we have different types of interest-bearing investments, and we have stocks from all over the world. We have large cap stocks, which have market capitalizations in the tens, if not hundreds of billions, now trillions of dollars, or small cap stocks, Canadian stocks versus European stocks or Asian stocks. And we have things like private equity, so assets that don't trade on public markets. And we're going to have a guest speaker here in the coming weeks who's going to talk about that. But really, it's kind of this idea that each investor probably has their own optimal portfolio. So a portfolio that gives them a trade-off between preservation of capital, growth of capital, but then a certain amount of volatility. Just like you started off today's call, we were talking about this extreme volatility that picked up over the weekend, and you had certain asset classes drop, as much as 4% over 24 hours. Whereas at the same time, you had some other assets that continued to rise. And so if you can find assets that have different correlations, so move differently as the market reacts to, say, maybe new information, some of the losses on a portion of the portfolio are made up by gains coming from another part of the portfolio. And so that's usually what we talk about when we're talking about diversification. Anybody out there who's listening to our podcast and has ChatGPT can find a little bit more by investigating this idea of this efficient frontier or modern portfolio management, which talks about diversification and creating optimal portfolios.
And you can never go wrong by looking up more and reading more on stuff, whether the chat GPT is, AI is the start. You want to make sure that you've got a good source and getting accurate information as per usual. Let's talk about philanthropy and whether or not it's applicable for everyone or just the rich. A good example is Bill Gates, Warren Buffett, even Elon Musk talking about giving away their fortune rather than leaving it to their relatives and such. Is it just for rich people or is it for everyone?
Yeah, I thought this would be a great topic for today because this was interesting in the news. Elon Musk, when he departs this world or maybe moves to another planet, we'll have to see what his plans are. But we know of that he has 12 children. And so when he was kind of talking about what he's going to do with his estate, which will certainly at least be in the hundreds of billions or trillions, unless he finds a way to screw it all up, this idea of giving away all your assets at death, or this idea of maybe giving up, doing more charity while you're alive. Now, the idea of philanthropy is an incredibly personal thing. Not everybody believes in it, but certainly for those that do believe in it and then are wanting to come up with a plan for how to do this, call it smart giving. Often when we're doing that in the context of financial planning, as we call it philanthropy, how do you want to do it? And I'm sure everybody kind of knows somebody that when they got an inheritance, it didn't actually improve their life. And in fact, maybe in some ways it changed the course of their life in a negative way. And so I think that this is probably what people like Bill Gates and Warren Buffett and Elon are thinking, is that, to go and give their children this immense amount of wealth, maybe now it takes away the incentive for them to take a path that would better their lives. And so we talk about it with clients in terms of what their plans are. And I think the natural thing is for people to think, well, I'll make a donation, maybe a large donation at my death. But then we also kind of propose the idea of, well, why not go and look at making that donation while you're still alive so that you can see the benefit of that donation. Many people think of this idea of kind of leaving their community better off than maybe the way that their community was when they first either raised a family in that community or started a business. There is tax incentives and there is some benefits in terms of doing it while you're alive or doing it when you pass away. So in most cases, you can find provincial and federal tax credits to do corporate giving while you're still alive. That can be as much as 75% of your income. So in terms of the credits. Now, when you pass away, depending on the size of your donation, you can actually find combined credits to cover 100% of your income. So quite a bit of a difference in terms of the tax credits that are available by making that donation while you're alive versus perhaps that you're passing. So 100% if it's a donation at death versus 75% max if it's a donation while you're still alive. But some of the benefits to doing it while you're still alive is that you can take some assets that would normally be taxed at your death and give them away to maybe either family or charity, get that tax credit, see the benefit while you're still alive, and also reduce the size of your estate at death so that you're reducing the size of your estate that would be taxed and would also be subject to probate. So I think it's definitely looking at options, looking at what you want to kind of achieve with that gift, and also thinking about how that gift is going to impact your heirs or the people that are part of your beneficiaries of your estate, but also thinking about, what would be, call it tactical with regards to tax. I think the other thing that's interesting is this idea that it's not just for the rich. We recently had someone in our office talking about setting up a foundation in your estate so that you can have some giving for many, many years, perhaps beyond your death. And the average size of a family foundation in Canada is about $25,000. So yes, there are some really large family foundations that I'm sure have millions or hundreds of millions of dollars in it. But even these smaller gifts can do things like scholarships or fund local charities for a number of years, and they don't have to be in the hundreds of thousands or millions of dollars, but they can make a significant impact for a longer period of time, even with a relatively small donation.
Estate planning in that fashion, is it like an estate planner that you go to, a lawyer that you go to, your financial advisor, your tax accountant, or all of the above?
So that's a great question. Personally, I think it's a great conversation to first of all have within your family to make sure that kind of everybody that's involved is kind of on the same page and that everybody's kind of informed that this is something that maybe it's mom or dad wants to do, or maybe it's an idea that comes up from the kids in the family. But ultimately, in the end, it's going to have to be drafted in the right way. It's going to have to be constructed so that in the end, the donation the donation works the way that you intended it to. So I like the idea of recommending my clients that are interested in this to a lawyer who specializes in estate planning. And that's really key. Now, a lot of medium, large size law firms, they have a designated individuals within the team that's all they do. And I think that's really important because, unfortunately, I think there's probably lots of lawyers that would say, oh, I do estate planning. But in this particular case, I think you really want to see someone who's a specialist in estate planning, who's had lots of conversations with people about creating the gift in the way that it was intended.
And even beyond philanthropy, having a good plan for that when it all happens, so you're not burdening your beneficiaries with the tax burden that they can't handle, is super important. Great points. All really good stuff. The Wealth Roundup for the week of October 15th, 2025. Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns.
Thanks, Terry.
This has been the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. I'm Terry Evans. The Wealth Roundup is part of the Reluctantly Podcast Network.